Hello, this is Mike Swanson. I run the website WallStreetWindow.com, and I got a really special guest with me today. I'm speaking with David Skarica, who runs the website addictedtoprofits.net. How you doing today, Dave?
Good, man. As you see, due to social distancing, I can't go to the hairdresser or barber. So the hair is getting a little long.
Well, you're becoming a real bohemian. That's where you are. For people who don't know that, you live in the Bahamas. But here in the United States today, we saw the markets go red in the morning. But now it's 1 o'clock and the NASDAQ went green. And there's, renewed excitement. Some of the tech stocks are up a lot. Amazon, Google, Netflix, and so forth. So do you think now's the time to start buying more stocks or doubling down?
I think what's going on with the market rally is I think like the six largest market cap stocks, in the United States, which would be like Amazon, Microsoft, Apple, etc. They're a bigger percent of the market than they've ever been, and way bigger, like even way bigger than in 2000 when you had all those big tech stocks become like the majority of the market. So I think what's happened is too, and a lot of those companies are the kind of companies benefiting, from what's going on now. If no one can go shopping, so they go order everything off Amazon. No one can, you can't go to a movie or go out, so you just watch stuff on Netflix, right? And then there's, even Walmart, right? Because again, you can't really do much other than, when lockdowns happen. So you might just spend all the money that you have going to a Walmart and just loading up on your groceries or the whatnot, right? So I think that's what people have to understand. A lot of the indices gains are in these few stocks. And, then if you actually look at the healthcare stocks, and that makes sense because, there's going to be more demand for drugs or testing or whatever. They've held up really well too. So it's just a couple sectors and a couple stocks that kind of driven this higher. And I think when this bear market rally tops out, probably sometime in the summer, everything will kind of roll over. And I think, and then the also reason for the rally is people are expecting that after like 3 or 4 months of quarantine or lockdowns, everything's going to come back to being the same. And I don't believe that. I think number one, there's a good chance there is a surge again of cases in the fall when we enter flu season, even if the surge is not as big as this surge, and that will scare a lot of people again from going out. And then if you go look at things like travel, there's going to be, even if there's no surge, the next 12 months, there's going to be, the way people are going to live is going to change. If you want to travel, they're going to be mass testing. You're going to have to show that you're negative. You're going to have to wear masks. There's not going to allow as many people on a plane. It's just going to be, when the bailout money ends up, the airlines are going to lay off a bunch of people and have much smaller fleets, active fleets, which means actually prices will probably go up for traveling too, like for buying, a plane ticket. All of these things which are going to change our life. And I think people are just thinking right now, they're just thinking the short term, oh, I'm locked down, I want this over with. And they think that when it's over with in 3 or 4 months, everything's going to change. But if you look at most of these pandemics, and I'm not even talking about 1918, you look at the Asian flu in 1957, you look at the Hong Kong flu in 1968, there's always second, third waves. So, and actually, 1918 was very rare in that the second wave was much stronger than the first. Most of them, actually, the first wave is the strongest, and the second wave is a little less, and then the third wave is almost like nothing, and then it just kind of goes away. So I think that's where we're headed. But I think there's so much paranoia and so much fear that if we get this second wave, and it's even a quarter of what this is now, people are going to be scared it's going to pick up again, and that will really put the nail in the coffin, probably for the market and things as a whole. And look, at the way I'm viewing it is I saw another interesting stat that something like 78% of people who lost their jobs in this think they're going to just go right back to their jobs. I personally think it's going to be less than half. So you go look at it, the unemployment rate was like 4% before this all started. It's probably going to 25, so it's going up 20% roughly. If only a third of those people or 40% of those people get their jobs back, that means you go from 25 to like 17. And 17% unemployment is still the highest since the Great Depression.
Yeah, it's remarkable what we're seeing and living through. I was telling you before we talked, I read a study this morning that said that when it came to airline travel, after 9/11, there was a plummet in airline travel, and it took 3 years for it to get back to where it was before 9/11 because people were scared to fly. Now, I wasn't one of those people because I was flying a lot. That's kind of when I started to fly a lot, was after 9/11. But it took 3 years to get back to where it was. So this is a much more, I believe, riskier situation for people flying than terrorism. So if it took 3 years to get back then, it's going to take at least that long this time, as far as it goes for airline travel. But that's going to impact the leisure world, Las Vegas, for example. But all kinds of things. But that's just one little example of what you're talking about.
Well, I think you're talking about Las Vegas. I'm a big Raiders fan, so just like that to me, and they announced the schedule in the NFL, and then there's that you can sell your tickets on StubHub or whatever the resellers, and the Raiders have like almost the highest ticket price because they have this new stadium and they're playing in Vegas. But to me, that's another aspect of this delusion that I'm seeing that right now they're so scared of this that the NFL draft everyone did from their homes. They announced the pick, like the commissioner did it from his home. All the TV personalities weren't in the studio. They were in their homes. I'm like, do you really think you're going from everyone being in their homes during the draft to playing in front of 60, 70,000 people in stadiums in 4 months? There's no way. I do think sports are going to return at some point, but it's going to be testing all the players, all the people who work in the organizations, telling them to kind of isolate themselves. You're just basically going to practice, then you're going back home. You're not going to restaurants or clubs, and most of that stuff's closed anyhow, so it's not going to be a big deal. And then playing in front of empty stadiums. So it's just, and again, when I saw that Raider thing, to me, it was like a microcosm of this kind of delusion, I think, that's going on, that everything is going to go back to normal, and it's not going back to normal. And like, even like, and I said, even if say the virus is one wave, like SARS was, right? Which is, I don't think it's going to be. Even swine flu wasn't one wave. But it's like, if it was, they're going to do social distancing and have all these rules, and you're going to have to be tested. You have an app on your phone or whatever the hell it may be. And it's going to make going to these events, sporting games, traveling, whatever it may be, really unpleasant. And then a lot less people are going to want to do them. Plus, a lot less people aren't going to have money, right? So I just think right now we're kind of in this twilight zone almost. And I guess if you look at it this way, in March of 1930, most people didn't realize they were starting the Great Depression. In summer of 1990 in Japan, most people didn't think Japan was going into a 30-year economic malaise. And I think that's the way people are now. They don't realize we're kind of in this prolonged downturn, and they think everything is going to go back to normal. And I guess for the average person, it makes sense because this thing, the stock market going down initially, the spike in unemployment has been caused by a pandemic, not by an economic shock, like say a financial crisis. So it's people can just say, oh, it's because of that. When it's over, everything will be normal. But the issue is there's so much leverage, so much debt in the economy that it just made it so vulnerable. That's why in 1968, nothing collapsed. 1957, nothing collapsed. Swine flu happened at the end of the Great Recession. Everything already had collapsed. And then, in 1918, as bad as it was, the economy in the country didn't collapse because there was no leverage in the system. Like, let's say you owned a small restaurant or service business in 1918. Well, then no one had debt. A lot of people would have owned the little building they were in. They would have had a lot less business for like a year or two, but then things would have come back and be normal. But now people have debt. They have huge rents, huge mortgages. And if things kind of come to a halt for 6 months, they're basically broke. So that's the big issue.
Well, if we think about the stock market, this rally, and the people that are buying it think of it as this is a return to normal. So it's a return to normal stock market rally. But if things are going to return to normal, then the rally would at some point would fall apart. It's probably not today or next week. But what if there's another argument that the market is simply going up? Yeah, there's these people that think that they're wrong, but the Federal Reserve is there. They're printing money like crazy, trillions of dollars of bond buying operations. And then the stock market, because of what the Fed's doing, can just go up now forever. Well, is that possible?
Look, I do believe at some point we're going to enter an inflationary stage, but it'll probably be after another 12, 18 months of deflation. So, and there's actually one other interesting thing I want to talk about in a second that has to do with the stocks just going up, which I think people are ignoring, right? And I'll ask you to put a chart up of this afterwards, put below this interview. But I just think that, look, if you're in a hyperinflationary stage, like what happened in Argentina or Venezuela, the market goes up because there's hyperinflation, right? So, even though it's going down in real terms, if you go look at the Argentina ETF or even the Brazilian ETFs like such as these, in domestic terms, a lot of those markets haven't been down nearly as much, but, in US dollar terms are down because the currencies have tanked. So you could be in a hyperinflation, and that hyperinflation, could see the market go up. But I just don't think we're there yet. I think this is more, it doesn't matter how much money they print. Like you look at the airlines, for example, well, these companies are going to be diluting, issuing stock, issuing convertible debt, plus their businesses are going to be 80 to 90% off. They're going to have to dilute more, and their stock is going to have to adjust for that. So I don't care how much inflation that is. Delta's going to $5, right? That's what people don't seem to understand, is that just because they're printing money doesn't mean it's all going to go right back into the stock market, especially with businesses deteriorating so much. And here's another interesting thing that no one's talking about right now. I'm short the LQD, which is the investment grade corporate bonds. And it did have a big rally, almost back to its highs, when the Fed said they would buy corporate bonds. But it's right now right back at its 200-day moving average and looks like it's rolling over again. And if you go look, the Fed can't prevent insolvency. A lot of these corporate grade bonds are going to become junk bonds, which means the LQD's got to dump them. And if they have to dump them with no buyers, even though they're junk, they're still going to be in the fund. And then there'll be a gap down in the price, and the LQD is going to end up holding them. And if you go look at the TLT, and this is what's really interesting, that to me looks like a total top. You had this massive blow off, in March, and you go look at it, and then you had this decline back to the 200-day moving average. Then you've had this kind of failing rally, and the TLT now is rolling over again, and they're issuing something like $3 trillion of debt in the next couple months, and the deficit this year is probably going to be $4 or $5 trillion. And I just think at some point that does mean something. You can't just print money. I think forget the Fed buying the bonds. Anyone who wants to own a 10-year treasury at some point is going to say, hey, you got to give me 2 or 3% if you're going to have a $30 trillion national debt and, $4 or $5 trillion, 20-30% debt to GDP or deficit to GDP deficits. So I think that's interesting to watch, because if that TLT has topped and the yields have bottomed on bonds, the country now is so indebted that a 2% 10-year bond would be almost devastating.
Yeah, well, it's probably going to happen in a couple of years at some point.
And one thing that we've talked about, both of us, is actually people think that, bond prices just went up because of deflation in the 30s. But I think it was in 1931, there was a huge bust in the corporate and government bond market, where because of the big deficits and because of the issues with, debt and the lack of business because of the Great Depression, there was this big spike in yields that lasted, I think, for a few months. And so I think that's another thing people have to watch, that we could very well see these spikes, in yields in corporate debt, even in deflation, because of the issues companies are going to have servicing their debt. Companies are going to have, business-wise, less revenues, et cetera. And a lot of them right now are going on borrowing sprees because they're essentially trying to keep themselves afloat. And it's the delusion I talked about earlier. They're borrowing like crazy, thinking that, when the pandemic's over in 3 or 6 months, everything will be back to normal and we can, pay off that debt. But if things don't get back to normal, they'll have a huge amount of debt with much lower levels of revenue and profit, if they have any profit.
Well, in the I guess the last few minutes of this, I know most people that watch this, we're not just bears on the markets, even though we're bearish on the market. We buy stocks, we do trades, and right now, frankly, your trades are on fire, And I just want to throw out like two ideas. I'll give one and then ask you, to give an idea for the people. But the one stock we both own, I bought it last week actually. It's called Inca One. Um, INCAF is the symbol in the U.S. IO in Canada, and it's a small producing mining company. And gold, has been outperforming the stock market. So that's one I like. What's a trade or a stock that you feel like you could share with people out in YouTube world?
I'll give you another small producer we both own too. It's called Galani, GG.V. And the same thing, it's a producing, I think Inca One's doing about 25,000 ounces and Galani is doing about 35,000. And they're in Africa. They had to shut down some of the production because of the worries, miners and COVID. So I think once that production comes back online, Galani will start to move. And it's still really cheap. It's sitting at 8-9 cents and really hasn't moved through all this. So I really like Galani. And then I have two actually healthcare stocks. And I have both the stocks and call options on the stocks. And both have done very well. One actually, when it spiked, we sold some of the call options into it and actually made about 3 or 4 times on our money. So one is a company doing that mass testing. I'll give that one away. That's Abbott, which has these 5-minute testing kits. And I think there's going to be more mass production of them. And then the other one, I'm not going to give away. It's for my paying subscribers. But it's the company that, look, a vaccine is very difficult. There's never been a vaccine for one of these things. Even the flu shot is not fully 100%. But if you could find some kind of vaccine that, say, reduces the effects of this by, say, half or 3/4 in the average person, it would be huge because people wouldn't feel scared that if they got it, they would be like, well, if I took this vaccine, I won't be as sick. And this company is a British company. And I think they're the furthest along in terms of the testing, and they'll have results out in a couple months. And I have some shares in that and some call options in that. So if you subscribe to the service, which is $35 a month, and I have a special, and it goes up to 70 after 1 month, but for the first month, you get 50% off. You'll obviously get that trade, and I think that could do really well. So this is kind of what I do too. I'm not just, like you said, I'm from a pair. Like I bought call options also on Pan American Silver, did really well, on SLV that have done very well. I look to buy stuff that, when it's cheap and the whatnot, or look to take advantage of stuff. Like I also have a little micro cap security company, which I think will benefit from this. And we just recommended that on Friday as well. So that's the kind of thing I do. I'm not just a doom and gloomer. I'm looking for like opportunities as well on the long side, and not just in precious metals. So precious metals is what I'm most bullish on, but I do want to find things outside of precious metals. And like I said, I mentioned Delta earlier. If Delta does get to, $5 in the fall, when it's obvious that things aren't turning around like people think, I think it's a great buy down there.
Well, the action in the market's interesting today because on Friday the stock market went up, and now I'm watching lots of individual stocks, not just the Dow or the S&P, and basically on Friday, almost everything went up, but today is different. Even though the NASDAQ went green, almost every single airline stock was down 4%. Around noon, even with the NASDAQ in the green, and lots of other sectors are like that too. And I think that, again, suggests that now is the time when you really got to pick out the stocks. So, for example, if you want to short sell or bet against stocks, do it with the ones lagging the averages, and do the opposite. If you want to make money in these markets, you got to pick out the right stocks, as I think your call option trades would suggest.
Yeah, and I think too, like the thing about those two trades I talked about, those aren't cheap stocks. Those are stocks near the 52-week highs, etc. But they're in potential parts of healthcare that will do well if like I said, the testing and a potential vaccine. And by the way, it's a way of hedging each other too. There's no vaccine, people need mass testing, and the need for mass testing goes down if there's some form of vaccine. So I'm kind of hedging myself with those two trades as well. So, but no, you're right. Like I'm looking at the stock market, and there's many things down today, even with the reversal in the market. And I think too, what's happening again to get back to the market. There's just huge run into, not just those big FANG stocks, but stuff like Zoom, stuff that's benefiting because people are staying at home. And I think on the other side, those are going to be great shorting opportunities this summer because, we mentioned Netflix in the last podcast, how people aren't going to watch that crap when they can actually go outside again, right? And I think Zoom's the same way. Like people are doing all these conference calls, but once you can go back to work and do a meeting, that kind of surge in the Zoom demand goes down a lot. So there's all these other kind of deals out there. And by the way, the security company, so just quickly, I'll mention this one too. It's called Plymouth Rock. It's a little Canadian listing, and they have like a drone technology where they can test to see people's body temperatures or like see if people have armed weapons on them. And I think that's a big, on both sides. Obviously, the body temperatures part has to do with, if people are sick. Right now, people are, paranoid about that. And then the other part of that is with the guns and stuff is that if you do have a bad economy, there is more crime. People are going to need these security measures to make sure that your house, your business, whatever. And if you have some alarm go off and some guy's within 20 feet of your house and he has a gun on him, that's, it's kind of good. There's going to be demand for a product like that. So anyhow, these are the kind of things I'm looking for other than just, gold and silver. Like one sector I tell you I've been bullish on for a while, just because the stocks were so cheap, was 3D printing. And the 3D printing stocks have actually had a nice bounce because they can 3D print swabs, which they use to test people. So like there's all these kind of ways to look at it. Now, if there's a downturn in the market, I really don't know if a 3D printing stock's going to hold up, but I think gold and precious metal stocks were. So there's all kinds of things you can do. And again, last thing before I go here, I kind of mix it up. I'm looking for these, cyclical companies like casinos, like airlines to get cheap enough to buy. And I think I said, if they get to be single digit stocks, they will be. And then I'm also looking at these things that could benefit from, kind of this lockdown or this kind of weird, I guess, a time frame we are for the economy right now, if that were to last a little longer. So I'm kind of looking for multiple things. And of course, gold and precious metals, because of the way they're blowing up the debt and the deficit, et cetera. And then, like I said, I have these puts on the LQD. And if there is a major top in that government bond market, those corporate bonds are going to follow suit. And like I said, it's nice that the Fed is buying corporate bonds, but the one thing they can't stop is downgrades, and companies essentially going bankrupt.
That's right. Well, thanks for taking the time to talk to me and everyone else. I highly recommend everyone watching to grab your trading service. I'll provide a link for it below this video. And as you said, that first month, they get a pretty nice discount to get into it, get started, make some money, then go on from there.
Yeah, and if you're interested in those trades I talked about, if you sign up the service, I'll give them to you. And also, Mike and I also do a lot of private placements. We got a bunch of good gold deals and mining deals right now. So if you're interested in that sort of thing, you'll get access to it if you join the service as well.
Okay, we'll talk to you later. Thank you.